Okay, well, good morning, everybody. It is the 6th of October. That's a famous date, the 6th of October bridge. Yes, 6th of October, yes. Probably won't go down that path. But once upon a time, the 6th of October was a big celebration in Egypt. Maybe it still is. Welcome to the Daily Energy Markets podcast. It is 10:30 UAE time, and Brent crude oil is trading a little bit, pretty much no change, but ultimately 84 and change. Speaking of owning one's mistakes, let's kick off with Mike McGlone, Senior Macro Strategist at Bloomberg Intelligence. Mike, the direction of travel is in your direction, so perhaps you don't have to own up to mistakes today. Your thoughts on how the bulls should be interpreting this rather dramatic drop off after the very bullish third quarter, now with early October certainly going against trend, prices dropping rather than rising. Your thoughts?
I think they should be viewing it akin to 2008 when crude oil peaked around 147 and 1990 when it peaked around 40, because that's where I think it's going. In a typical U.S. recession, our Bloomberg economics team has that about 100% to start kicking in by the end of the year. We're already in recession in Europe. China is somewhat dicey, certainly deteriorating economic growth, and most central banks are still tightening. Then you look over at the U.S., we have unleaded gas demands down about 5% from pre-COVID. Supply is just taking off. If you include Canada, we have an excess of daily supply, about 6 million barrels a day. And I see crude oil doing what it normally does, Sean, and the pendulum swings, and it swings down hard, typically up on the escalator, down in the elevator. So I think WTI is going to head towards 40 in a normal U.S. recession. Somehow to avoid that, I don't know. But the recent uptick in crude oil and bond yields is tilting. It's actually somewhat of a rate hike. It's a tax on global economic demand, and I think it's just going to tilt it back lower. And it's just a question of time. The key question is what stops this normal trajectory for crude oil. So lately, I've been liking to compare crude oil to copper. Now, copper's already started to make new lows. It's down about 6-7% on the year. You look at natural gas, it's plunged. Look at things like wheat, it's plunged. Most commodities that pumped last year are going down. And it's just a matter of time that one of the world's worst performing commodities on a macro basis versus other commodities, crude oil, should catch up. So that to me is where we're going. And it's the question is what might stop it. And the recent jawboning and supply cuts from OPEC only, I think, is going to accelerate the normal process for crude oil to get cheap to reset itself.
Lori Hatayan, MENA Director, Natural Resource Governance Institute. Lori, similar question, but ultimately to on OPEC Plus. I mean, all of us are trying to read the tea leaves on this one. How do you think OPEC Plus should be regarding this drop back? Q4 was always, according to OPEC itself, going to be very, very tight, a supply deficit of 3 million barrels a day. But yet, at least in the first week of the fourth quarter, that hasn't been the case. How do you think OPEC Plus will be reading these developments?
Look, I guess it was always for OPEC Plus that they're cutting because they couldn't see that there is a pickup in demand, and they've done what can they do more than that? I guess Saudi Arabia is taking things into its hand. It has been doing that, and then today the prices are going down, but still okay. It's not that it's a big deal. So because they made a lot of profit when it was like almost reaching $100. So for them, and again, not to say OPEC, all the OPEC Plus, it's like a couple of countries or producers that are the most important. Saudi Arabia has taken its decisions, continuing with the cuts. The Russians are doing the cuts as well. So what else today they will be looking at if it's a demand issue? How can you bring back demand? And that is, I think, something that how much control do they have on that? They do have control over supply, and they can increase, decrease as much as they can to stabilize the prices. But more than that, it's a demand issue. If it's a demand issue for those who are following up the daily market. So how can you incentivize the markets and bring back everyone to a situation where they feel they want to invest, they want to spend money, they want to be happy people. But I see that the world is not going into that direction. Everybody is worried about tomorrow. And that's why they might not be spending much, just like to vulgarize the situation and not to make it complex.
Dr. Raad Al-Qadiri, Managing Director, Energy, Climate and Resources at the Eurasia Group. Dr. Raad, let's just start off from your sense of how the US administration, and maybe less so the Europeans, but ultimately the US administration, the body politic of Washington, will be interpreting this one. Is this a trend line moving in their direction they can sit on their hands now?
I think they'll be relieved. There was certainly short-term pressure growing as they were looking at gasoline, as they were looking at petrol prices sort of over the summer, sort of rising to higher levels. For an administration that's heading into a presidential election next year, that's always a worry. And the economy is always sort of foremost on the minds of any administration. So I think, for them, a move in this direction is going to be a political relief, and one they're not going to try and get in the way of. I think the administration, over the past couple of years has sort of set 70 as sort of for WTI is probably sort of where they're most comfortable. And they'll see sort of prices moving in that direction as something they're not going to interfere with in the slightest.
Mike, has much changed in a week, this drop off? What's the trigger? I mean, the very deep in the weeds, bond yields, the outlook for this great recession that's finally arrived. Has the market just finally decided to listen to Jay Powell instead of hoping that he will blink? What's happened that's changed this sentiment, or at least appears so quickly?
I think we're entering the suddenly part of gradually then suddenly. The key fact is when crude oil peaked just about a week ago, managed money net positions, hedge funds, and all petroleum was about the highest, most net long since last November when it was around 93. So positions were way too long. I love when people are pointing out low inventories in Cushing. That's basically 12% of total U.S. inventories. It doesn't really matter anymore because all that oil goes down to the Gulf to get out of the country. And every time we go down that low lately, I went back 20 years, prices usually peak. And I think it's also macro, Sean. In our group here, we are almost that tilt towards recession at the beginning of the year, and then now we're going to soft landings off. So really the facts are it's really going back towards a real recession now. Certainly from economics, you look at leading indicators from the Conference Board, they're quite negative. That's been very accurate with recession. So it's the macro that's really kicking in. And bond yield spiking, I mean, it did the same thing. In 1987, the bond yields peaked right before the stock market crashed. So some of this stuff is pretty epic, cyclical stuff that's just kicking in. The key thing for me is in recessions, the stock market goes down. It's just a fact. And that to me is also, we know what happens when the stock market goes down. Crude oil has a much higher volatility, typically it goes down harder. And to me, that's what's happening. This is just normal mean reversion. The key thing is in the macro, the facts have changed. We've been in a zero interest rate world for 12 years at least, and negative interest rates in a lot of world. And now interest rates are high. The key thing to me is you look over that U.S. government 2-year note, and in 2 years, you're getting 10%, 5%, 1 year, it's yielding 5%. So that's a massive black hole for risk assets, and I think that's all we're going. I think that's what the world's realizing. And every uptick in equities are probably being sold. Upticks in commodities are probably being sold typically, and market realizes this is what happens in recessions. It's kind of hard to stop it now. And the point is, key thing I'll end with is you look at the Federal Reserve futures, they're still priced for more hikes in the system. ECB just hiked, and there's a recession there. Fed still, so we have to take these, and it's still early days from them really kicking into the system. So it's the macro. Crude oil is a whipping boy. It can be the wrecking ball when it goes up too much. It did in 2008. I think it just did recently. And the key thing I've been watching a lot lately is Dr. Copper. It keeps ticking down. Industrial metals, I'll end with this. The Bloomberg Industrial Metals Index on the year is down 13%. I expect crude oil in the stock market to follow.
I wanted to pick up on a story that bubbles in the background in the context of what's going to give us direction of travel from this point forward after this sudden drop into the fourth quarter? Obviously, the OPEC supply cuts remain in place, and that was announced the other day during the ADIPEC conference, or during, it was not at ADIPEC, but the OPEC plus group had their virtual meeting. But the other thing that happened, Laurie, in recent days, which is bubbling along in the background, was that the two senior Biden administration officials that seem to be leading the talks between Israel and Saudi Arabia, Brett McGurk and Amos Hochstein, and we know Amos quite well on this show because he's in the energy and infrastructure. He's been on our show a few times before he went back into government. Clearly, this deal is still going ahead, despite some serious reservations from, I think, 20 members of Congress, senators wrote a letter to Biden in the last week, sort of indicating their displeasure with this deal. Your thoughts on this progressing, how important it is? Could it be a black swan event that all markets, including energy, should be paying attention to over the coming months?
Look, once it goes under the radar and you don't talk about it anymore, it means that there is progress. When you see a lot of analysis going on media, it means that people are trying to blow things out or to sabotage things, or sometimes to send messages to others. So that's the world of media and politics. So basically, I do believe that this is core now. This is the main issue in the region about this new relation that will be built, normalization, peace, whatever you want to call it, confidence building, whatever, between Israel and Saudi Arabia. This is the most important piece, and I think this is what the Saudis are interested to talk with the Americans about, because they want to get out of it a lot of benefits for them if it happens. So I think it's still there. And it's a good sign when it's not being talked about in the media. But we know, again, the last we heard, it's kind of that the Palestinians were okay with that, which is an important issue. And we've all heard.
Okay with what? Sorry, what were they okay with?
So they were saying that they were okay with the deal between the Israelis and the Saudis as long as they get something out of that as Palestinians. And this has been resonated as well, or talked about by MBS in his Fox News interview, when he said that the Palestinian issue is important for us. We want to make their lives easier. He didn't mention anything more drastic or more groundbreaking. He said we want to make their life easy, and that's important for us. But at the same time, he said every day we're getting closer to peace. So, and that was the last statement we heard about this issue, and then nothing goes by. It means that there's progress happening. So that's very important. And as we said last time, with these new interconnectivity and the connections that we're seeing now from India to the GCC to Jordan, Israel, to Europe, these are the changes, the economic changes that everybody is interested about, everybody is excited about, to really have these potentials, to unlock the potentials of the regions, to do business, etc. There is a fatigue of politics definitely in the region. But at the same time, don't forget that our region, the MENA, I don't know if we can use still the MENA because it's becoming so different. You have the GCC, which is in a different world. You have the Levant, which is in a catastrophic situation. And then you have North Africa, which wants to be more seen as African, more than Middle Eastern or MENA. So you have all these differences. There's a lot
of actors there. I suppose, Raad Al-Qadiri, welcome your thoughts on this. Of course, a subject you watch closely. There's a lot of potential for spoilers here. But how important do you think this is, Raad, and how realistic is it in a year in which, as you said in your earlier point, we're now about a year from a presidential election in the United States?
I think the deal is huge for the Biden administration. It probably means more to the Biden administration than it means to any of the three players.
Wow.
And that's why you're seeing the efforts put in. That's why you're seeing envoys in Saudi Arabia pushing this. It will be
huge in the sense of importance electorally, or
I think it's a sense of having a foreign policy win, and having the Middle East seems to be that flame that US administrations are drawn back to time and time again. And it's true. I mean, to be able to get normalization between the Saudis and the Israelis at this point is as seismic as being able to get Egyptian-Israeli peace in 1979. I mean, it's a fundamental sort of core whole of the region. And so I think, for the administration, they see huge benefits out of this. I think, also sitting in the back of the administration's mind, going back to the oil question, is that somehow they can engineer lower prices in the long term out of this, away from Mike and the cyclicality, just in the longer term, that the Saudis are actually going to contribute something in terms of either moving more to a market share strategy or just delivering sort of lower oil prices over the long term. I think that's where we start to get probably even more into la la land than the notion that sort of Netanyahu is going to give you a two-state solution. But nonetheless,
there's a lot of la la land around this deal, ultimately, including
there is indeed, and I think
security guarantees.
I think that becomes the issue with this deal, is whether or not you can align what is most important for each of the players. And it's not clear that each of the players, when you sort of reduce it down to their sort of key asks, actually are in alignment. For the Saudis, this is, as Laurie said, this is about the goodies you can get out of Washington. Dealing with Israel is not a big deal anymore. It's not the taboo that it used to be. For the Israelis, this is about, getting recognition from the Saudis to ignore the Palestinians, to add to that politics fatigue that Laurie mentioned. And for the Americans, this is about, getting something that the Trump administration couldn't get, and transforming the security dynamics of the Middle East, probably isolating Iran as well and isolating China. I'm not sure that any of those planets align, but you're going to continue to get talks about it, and it may lead to partial progress, and partial progress may be enough.
Mike, I wanted to get your thoughts also on direction of travel in the fourth quarter. Where do we go after this, again, sudden drop? We've seen structurally the market get shaken up with 50-day moving averages breaking lower than 200-day moving. So the technicalities of this market have just thrown traders and technical analysis into a quiz. How does that get resolved? What impact does it have on the immediate direction of travel?
Well, if you want to end up with hair like Brad and I do, follow things like that. Otherwise, put it on your DI list. Deliberately ignore it. As being an ex-pit trader, deliberately ignore those things. Let those people rip themselves apart and the macro fundamentals kick in. And the bottom line is natural gas in this country, the number one measure of heat, electricity, and fertilizer, dropped 80% from last year's peak and went to multi-decade lows. So did wheat. That's a normal response when you spike the prices like you did last year. It's just the rest of the dominoes falling now. And the spike in bond yields is very similar to right before the stock market crash. So I'm really worried that we're going to just have a normal reversion in risk assets we have not had in decades, because every time we've done that, the Fed's been out to eat. So and this is a macro that really matters. We still have the most central banks in history still tightening as we're tilting towards recession. So I've been calling this the Great Reset. I think it's going to really kick in. Christmas sales I expect to be disappointed because it's just classic. Credit is contracting. People's bank deposits are contracting. It's clearly a sign the housing market in terms of sales has collapsed. It's completely seized up, and it's just a matter of time. You have the normal economic cycle kick in. So the key question is what stops it. The point is I'd like to make is usually when you have these type of things kicking in, a lot of central banks have already started easing, but they can't because the inflation that was created because too much liquidity. See the trap there? It's just the lessons of the book, The Boom and Bust. When you have too much liquidity pump, and then you dump, it's still dumping. So to me, this is just a normal trajectory towards a recession. Yes, it's taking long, but the problem is the pendulum swung a little bit towards, and not going to have a recession. Now it's starting to realize it is. So I look at the U.S. stock market's probably going to drop to down on the year, and everything's going to follow. And I'll end with this, one thing that's been significant. When you want to measure sentiment in this country, two of the best ways are stock market and unleaded gas prices. Unleaded gas prices jumped about 20% this year. Now they're back down a little, but that's not good for consumer sentiment. And the government's just not writing them checks like they did during COVID.
Let's go to the survey question just to sort of put a shape on what we've been talking about. Where does it go from here? What will have biggest impact on direction of travel for oil markets in Q4? Fed rates higher for longer, OPEC plus cuts for longer, China GDP outlook, or geopolitical's black swan, which is what we were just touching on as one of them, perhaps being the issue with this perhaps grand bargain between Saudi and Israel. Which of these four do you think will be the biggest impact on the direction of travel in the fourth quarter? Laurie, of those, within those options, and what we mentioned in our earlier comment, of course, is Iran and new supply, and the idea that that Rad indicated, the U.S. may hope that it brings lower oil prices over the horizon, the deal with Saudi and Israel. But of course, as part of it, we're kind of getting the indirect benefits already, which seems to be Iran can pretty much export what it wants. Sanctions are ultimately being unenforced. Where do you see this goes for Iran and the output of, Iran sort of circumnavigating sanctions and continuing to rehabilitate its oil and gas industry?
Yeah, I think like they're, despite the sanction, they're doing that. They're being kind of, as you said, like they are being able to produce and sell in the market, at whatever price or how, it doesn't matter. But it seems that this is coming back. So how are they going to build the industry? That's another question, I guess. Like it's different than like being able to really sell their product, oil or gas or whatever, under the sanctions. That's not pretty sure that they will be able to build whatever they want to build as long as the sanctions are there. But what we see, it's like, again, it's not that this issue that the Iran and U.S. relations are like core now. I think, again, because like the Americans are so preoccupied with like the progress that they're making with Saudi Arabia and Israel, they feel that's a bigger achievement than the other one that is more controversial about Iran and a new deal or whatever kind of deal it is. So Iran is like in the situation where now, yes, they're producing, they're playing their role that they do to play, whatever it is, to kind of inject needed oil and gas in the market to kind of stabilize. And then it's interesting, I read one article saying that that's good for the Americans, because that means that there will be a lot of dollars that are placed somewhere that the Iranians will want to take back, and then that will be for them, that will bring them on the table to do a deal, the same way like they release the prisoners in exchange of money they got or they will get. So that's the idea, that yes, let's bring them, let's have something in our hands to negotiate with them, and to bring them on the table to negotiate, like to be an easy negotiation, not tough negotiation, because they have a lot at stake and money is there. So let them pump, let them produce, let them have somewhere a money that it's stuck, and then we can negotiate with them and extract from them as much as we can. So that kind of process that we are seeing going forward.
Rad, on another sort of corner of the geopolitical stage is Russia and Ukraine, of course. We just have headlines flashing during our half hour together that Russia has lifted its diesel export ban, which has been in place for a few weeks. But also we've had the news this week of the collapse of the House Speaker in the United States, a lot of it revolving around the issue, to whatever extent U.S. continued financial support of Ukraine is tied into that quagmire. I'm wondering, from your perspective, well, one of the geopolitical black swan events over the coming months could be something quite big on Ukraine. Either the U.S. stop funding it, Russia gets more bullish as a result, or there's a deal. Or where do you see all of that going? Russia, Ukraine, and the Western alliance support.
I think the Western alliance support is going to continue. There's a debate in Washington, but fundamentally what you saw was a small group of extremist Republicans in the lower house who were able to oust the speaker. And that spoke to the razor-thin majority that the Republicans have in the lower house, as much as it does overall dynamics. That said, the question of aid to Russia, the question of financial aid to Russia, is something that's sort of started to come into the overall domestic political debate. And, you know, for Republicans and certainly for sort of Trumpians, you know, that question has become an important one, both to hit the administration with and one to campaign on, that, you know, Russian aid should end. So, you know, your black swan event is less a black swan. I mean, it's the likelihood that Trump wins the election next year and you have a major change in US policy as a result of that. I don't think that will stop European support, but Europe isn't providing the mainstay of money and arms.
Can they step it up? Obviously,
I don't think they can step it up to the levels that the US has been providing, certainly in terms of the money. You know, I think then you have to start to think of alternative means of supporting Ukraine. And, you know, that may be what Russia does hope for. But I think, you know, the black swan is more the sort of golden haired, or whatever color his hair is these days, you know, Republican candidate sort of walking in who, you know, will probably shake things up quite significantly. And in that case, you know, it's not just going to be Russia, Ukraine, it'll be global geopolitics. And this is going to be, again, America first. It's going to be an emphasis on, you know, if not isolationism, sort of very selective US leadership, and everything done on US terms.
And in the immediate term, obviously, whatever happens in the US presidential election, Trump, if he was to be victorious, still wouldn't be in the White House until the end of January 2025. So there's a lot of water under the bridge to play out till then. What's your sense of this theater? You know, we're going into winter now with Ukraine. The hot war sort of thing tends to ease off with that over the coming months. Is this a factor for markets to be concerned about or not?
I think markets are always going to keep an eye on it, but I'm not sure that it's a major factor for markets to be concerned about. You know, I think that, you know, what we have with markets at this moment in time is, you know, they're focusing on a very pessimistic future and rather than sort of a decently tight present. And I think, you know, that's the balance. And, you know, Mike put it brilliantly, you know, but that's the balance that's going to sort of play out within markets. I think if you look in the fourth quarter, fundamentals probably will remain relatively tight. You know, there is an argument to be made that you could see a short-term correction. But, you know, it's very much as we saw sort of earlier this year in June, market sentiment turned almost overnight from bearish to bullish. And it's been seized with that bullish sentiment until this week, and it's turned again. And the question is this a combination of technical trading and just being spooked leading to herd mentality? Or is this something sort of more fundamental that's going to persist? But it's a battle between fundamentals and futures. And at this moment in time, futures are winning.
Mike, last word to you on that. I mean, this contract, we're trading December now, delivery ultimately into the new year. So the market is looking into the first quarter, which typically is the weak wicket, the weak window of the cycle. Your thoughts on that, structurally, the market into the new year trading wise?
I think the risk is everything goes down for a recession. I'm pretty sure, I think crude oil peaked around 95, WTI, Brent pretty close to that. I think US 30-year bond yields probably peaked around 5%. And as we tilt towards recession, believe the curve, it's in backwardation. And I'm pretty sure we're like, you look at DEES right now, DEES Brent's 84, DEES for next year's 77. I think next year it's going to be more likely in a 50 or 40 handle. And that's just normal for a recession. And typically at this stage, for these things to bottom, it usually happens about a year and a half, almost 2 years after the Fed starts to ease. They're still tightening.
Still tightening. That is true. And it is Friday here in the Middle East, and we will be going on our weekend looking after an incredibly busy week with ADIPEC and all sorts of developments in the oil markets turning quite bearishly, staring at $80. Will they venture in that direction over the coming days? You'll have to come to Fujairah next week to find out the answers of everything, of course, which hopefully some of you will be. But listen, great weekend. Lori Hatain, thank you so much. Rad Al-Qadiri, thank you so much. Mike McGlone, thank you. Have a great weekend, and we'll catch you all very soon again. All the best.